1099s are submitted. What is next? What is the next task to be ready for those tax returns? That's exactly what I'm gonna go over with you today, is a basic business checklist that you can review to make sure that you are ready for your accountant. There are small steps that you can take throughout the year so that you are not bombarded with reviewing a whole year's worth of transactions, a whole year's worth of activity that has gone on within your business. It can be overwhelming, and that's why I decided to create this basic checklist so that you can just literally go down the list and check every single step that you have completed, or maybe there's some additional resources or additional information that you need to get in on one. And that's exactly what this checklist is supposed to do. It's just to give you an overview of what you should be looking at. If you haven't noticed already, these basic steps can add up. And it doesn't matter if you have a small business or big business, these steps need to be taken in order to be as prepared as possible for your tax returns. And also not only for your tax returns, but it also gives you an overview of where your business stands. Maybe there's some changes that you need to apply, or maybe there's some things that you thought were working but aren't. So it's definitely beneficial to review the health of your business so that you can know if there's some things that need to change or what is working within your business. So let's get started. Comment below and let me know if you would like to receive a PDF file of this checklist that I'm gonna go over with you. Again, this is a basic business checklist that will help you and understand where your business is and also help you be prepared for your accountant. So the first thing on this list is to make sure that nothing has changed from the previous year. Your balance sheet, profit and loss should all match the previous year's tax return. So nothing should have changed. And the way that we can make sure that this doesn't happen is by closing the books. I'll go ahead and link above a video that I made on how to close your books and why it's so important, because we do not want to accidentally change something in the books. Remember, when your tax returns are submitted, nothing from whatever you claimed on that year should change. And that's why it's best practice to close the books. We reconcile every month anyways, so I suggest every month, but it could be done quarterly. I definitely would not suggest to wait until the end of the year, because anything, even by accident, you could change something. It doesn't have to necessarily be on purpose. By accidentally, you could have changed something, and that just changes all the reports that we have already submitted. That's the first thing on my list, is to check your tax returns against the reports from last year. You have heard this before from me. If you haven't, I can also link a video above on how to reconcile your accounts. Reconciling, if not the most important, it's definitely one of the top ones. And reconciling allows you to make sure that all transactions that went through the bank are in your accounting system. Maybe the bank charged something that they shouldn't have, or maybe there's a transaction that you weren't even aware that should have been coming through your account. It's also a good way of catching fraud, because if you're on your accounts and reconciling, you'll know if all these transactions is what should have been coming out of your account. So reconciling is one of the top steps that you need to perform in order to keep your books in tip-top shape. And that reconciling doesn't include just your checking account. It includes all your business, including any loans that you might have, any credit cards that you might have, all accounts pertaining to your business, including payroll. Anything of that nature needs to be reconciled. And one thing that I have noticed within loans that a lot of clients are forgetting to do is reconciling your loans versus principal versus interest. A lot of clients think that by inputting the payment itself, they're done. But no, you have to separate that payment between principal and interest. And then also you should be reconciling those payments versus the actual amount that came out as interest and the actual amount that came out as principal. So definitely reconcile your bank loans and all accounts pertaining to your business. If by reconciling you notice some discrepancies, definitely address those discrepancies, and also make sure that you have receipts for all transactions that are being reconciled, because if they're being reconciled, that means you are claiming them on your tax return, and we all know that we need to prove to the IRS that those transactions were business related, and the only way we'll be able to do that is by keeping those receipts. I have previously created a video on how you can keep those receipts electronically. I'll go ahead and link it above. And the great thing about the video, it's on the Google iDrive, so it's free. And of course, let's not forget about our accounts receivable, right? So we want to know, we want to review that we are receiving all our payments, and maybe there's some payments that we have not received. We have to address it. Are we going to write them off? Are we going to take the steps to try to get that payment in as soon as possible? Some incentives to get those payments in is maybe send a letter out to your client and letting them know that maybe you'll give them a discount so that you can get that payment in. We are providing our services or product and we want to get paid for that. That's the reason why we're in business, right? So definitely review your accounts receivable. And with that being said, it goes right into accounts payable. So review that you are making your payments on time. We want to keep our payments on time because that's going to affect our business credit. And we definitely want to take care of that business credit for future loans that we might have to take out. It's a good time to review if maybe there's some bills that you can pay in advance. That's definitely a task that I suggest performing before December ends if you are submitting your tax returns on a calendar year, because that will help with your tax returns in paying less taxes, because the more expenses, the less income you're going to have to pay taxes on. So we're going down our list and we've reviewed a couple of tasks, and the next one is reviewing your assets is very important, because I have noticed that some clients are putting expenses as assets or assets as expenses, and that is definitely something we have to put more attention into what we are submitting as an expense and what we are submitting as an asset based on the policies that are within our business. For my next task on my checklist, if you feel like you are not comfortable reading your reports, that's okay. This is just a basic overview that you would be doing, is comparing your report from last year to the current year. And what you're looking for when you're comparing your reports from the previous year to the current year is any major changes which can pinpoint some bookkeeping errors. So just a basic overview. I know that some people are not as comfortable with reviewing reports, but that's okay. We are doing the basic review of what has changed from last year to this year. And if it's a significant change, then again, that should pinpoint you in the direction of take a look at that category, that part of the report, and see what caused that change to indicate if there were any bookkeeping errors. The next task on my checklist is filing your W-2s or 1099s, depending if it's applicable. By the time this video airs, most 1099s should have already been submitted, but it's also a time to reflect on how difficult was that task. And if it was, then maybe there are some steps that you need to take throughout the year that will make that task less daunting. And one of those things is using your client list to keep those 1099s current, and I did create a video on that, so I'll go ahead and link it above if you're interested in that. One of the final things on my checklist is reviewing your mileage log and that odometer reading on your report. Make sure that you have all the receipts that pertain to those miles that you're claiming. It's something very important because at the end of the year, we are able to claim miles that have been used for business purposes. A couple of extra tasks as a bonus are, if this is your first time as a business owner and first year that you are going to be submitting tax returns, speak to your CPA and determine what is the best way of filing your tax returns. Is it a sole proprietor, LLC, partnership, whatever the situation is? I definitely suggest to review your situation with your tax preparer. I definitely suggest to schedule this review with your accountant throughout the year, but if that's not the case, definitely at the beginning so that you're not doing it last minute. Also determine if it's time to open a retirement account, because remember, yes, we love our business and yes, we love what we are doing, but we want to think about our future, and a retirement account is a great thing to start off as a business owner. If you haven't already, make sure to make that fourth payment, quarter estimated payment. We don't want to fall back on that, because we are distracted by our year-end checklist. Definitely take care of that so that we don't have any additional tasks that we have to add, right? So I hope that this business checklist was helpful. It is a basic overview and it gives you an idea of what you should be looking at the end of the year so that you are ready as possible for those tax returns. And also make sure to take these steps throughout the year so that it all doesn't all build up at the end. Like the video, comment below, and subscribe if you haven't already. And I hope to see you at my next video.